Welcome back to Investing Talk Podcast. Today, we are zeroing in on Uranium Energy Corp's upcoming earnings report. This is a really crucial moment for them, being the largest U.S. uranium supplier. We're going to break down the financial expectations, look at some, unexpected metrics driving serious stock volatility, and also the massive industry catalyst looming over the next 3 months. And hey, if you want us to look into a specific company for a future analysis, please do leave a comment below. Also, remember to subscribe, like, and comment. It really helps support the show. Okay, so let's unpack this company. We know the nuclear energy sector is currently riding this massive wave of political and clean energy attention. This specific report we're focused on is Uranium Energy Corp's fiscal year end 2025. It covers the quarter that ended July 31st, 2025. And this data, it's set to land on September 24, 2025. That's before the market opens. Then there's a conference call at 11:40 a.m. Eastern Time.
Yeah, and this report is shaping up to be, well, potentially a lot more eventful, maybe more volatile than your typical quarterly filing. The core tension we see right off the bat is just a lack of visibility we have going into it.
That lack of visibility, that sounds like a critical starting point. What exactly are the analysts telling us? Or maybe what are they not telling us about their expectations?
Well, what's fascinating here is the sheer challenge, really, of predicting these results. It comes down to the lack of analyst consensus. Normally, we'd have a fairly tight range of revenue or maybe EPS whisper numbers floating around. But for UEC this quarter, that just doesn't really exist. And this data vacuum, it automatically assigns this report a high volatility risk. Our internal confidence score for prediction is sitting exceptionally low right now, like a 4 out of 10.
A 4 out of 10 prediction score. Wow, that does sound highly risky. For the average investor then, what does that volatility mean in practice when the earnings actually land? Is it just that the stock will move more, or is it more that the surprise factor is kind of baked in?
It means the stock is highly sensitive, really sensitive, to any narrative the management team crafts on that conference call. And any slight deviation from the few expectations we do have could cause a big swing. Currently, despite that high uncertainty, market optimism is, well, it's pretty clear when you look at the macro valuation. UEC holds an astronomical price-to-sales ratio, 81.51. I mean, that kind of multiple reflects immense, almost complete faith in future growth and their strategic position, not really current profitability.
That price-to-sales ratio, that's the central tension here, isn't it? Because the market narrative seems to be soaring, but the actual short-term financial expectation looks, well, a lot more grounded, maybe even challenged.
Exactly. Wall Street has issued an EPS estimate of -0.03 for the quarter, and -0.03. This really highlights that ongoing financial challenges are still the expectation for this specific period. And maybe the market's willing to look past a small loss because of that bigger strategic picture.
Right. So the consensus seems to be they're still burning cash slightly, but the revenue side must still look strong enough to justify that incredible valuation multiple.
It is. There's a strong estimated $17 million revenue projection. That's a number that suggests sustained confidence in future growth and, contract flow. And we also have to add the seasonal context here. This Q4 report, the one ending July 31st, is historically the strongest report of Uranium Energy Corp's entire fiscal year. Often that's due to contract timing. So that history offers a slight tailwind, right? Even if the quarterly EPS itself remains negative.
Okay, so we have a company trading at this premium valuation that reflects its narrative, despite the actual expectation of a loss this quarter. Let's talk more about that narrative, their market positioning.
Yeah, if we connect this to the bigger picture, Uranium Energy Corp is frequently discussed, and correctly so, as the largest U.S. uranium supplier. And look, this is not a trivial position. It means the company benefits directly from that growing nuclear energy policy emphasis, particularly in the U.S. The domestic supply chain focus, heavily favored by current legislation, that helps them a lot. The strategic position gives them a really potent narrative that, honestly, often overshadows immediate quarterly operational performance.
And we saw that narrative tested pretty heavily recently, didn't we? The stock didn't exactly have an easy summer. Over the past 3 months, so through July and August, the stock navigated some significant market volatility, mostly due to the fluctuation in global uranium spot prices. That uncertainty truly tested investor sentiment in the short term. It pushed the stock up and down, kind of regardless of UEC's direct internal operations.
That volatility really highlights just how much this stock trades on the macro picture, the price of uranium, the policy direction, rather than just sequential production numbers.
Now, here's where it gets really interesting on the sentiment side, though. Those insider signals. We saw that CEO Amir Adnani increased his direct ownership by, what was it, 156,547 shares back in July 2025. Now, that transaction came via an RSU conversion. For listeners who aren't familiar with the mechanics there, RSU conversion often involves some immediate tax-related selling, right? So why is the net accumulation still seen as a positive signal?
That's an excellent point to clarify, yeah. When an executive exercises restricted stock units, RSUs, they get the shares, but they often have to sell a portion right away to cover income tax obligations. That's the tax-related selling part. So the fact that Adnani's net position still increased by over 150,000 shares after covering those taxes, well, it signals sustained confidence in the company's long-term trajectory. It's maybe a minor indicator, but look, in a high-narrative stock like this, insider conviction really matters.
That bridges us perfectly to the core issue that might be driving the short-term results. We know the high PS ratio is driven by that strategic narrative, but the expected negative EPS, that has to be driven by something specific. So this raises an important question. What metrics actually drive this company's material EPS volatility if it's often not just, say, their operational mining production?
It's the non-operating assets. That's the key. UEC isn't just a miner. It's also an investor. And those large equity investments they hold, they're incredibly critical to the reported bottom line, especially in periods when their own mining assets are either in development or maybe focused on long-term stockpiling rather than immediate sales volume. The performance of these external financial assets, it can completely decouple the reported EPS from what's happening in their core mining operations.
Okay, so we really need to look under the hood at those specific non-operating assets then. What specifically should we be watching for in that September 24th report? And what makes them so volatile?
Right. The performance of their stake in Uranium Royalty Corp, or URC,
Yeah.
that is the absolute key one to watch. URC is a royalty company. So that means UEC holds an equity stake in a business designed to generate revenue through royalties or streaming deals on other mines, rather than through its own direct operations. It's a financial holding.
Ah, okay. So they basically own stock in a different kind of uranium exposure vehicle.
Precisely. And this is where the volatility really hits the earnings report. We know that investment dropped significantly in fair value over just a 3-month period. Specifically, it went from about $43.33 million down to $32.54 million as of April 30, 2025.
Ouch. Yeah, a decline of nearly $11 million in fair value in such a short window. That's pretty substantial. How does that kind of paper loss affect the EPS estimate we talked about earlier, the negative 3 cents?
Well, that $11 million swing in the value of a non-operating asset, it gets recorded as a loss on paper in their books. Even if no actual cash was spent or lost on mining operations during that time. So when you have thin operational margins, or maybe you're deliberately stockpiling inventory rather than maximizing sales, these non-operational, non-cash losses become hugely material. They can easily drag the reported earnings per share into negative territory, basically overriding any positive operational moves they might have made during the quarter.
Okay, that's the critical piece of information for you, the listener, isn't it? The reason the EPS might come in negative isn't necessarily a failure to mine efficiently, but it could be a required accounting adjustment for a stock they happen to hold.
Exactly. And URC isn't the only potential driver here. We also have the JCU joint venture. That's where UEC holds a 50% stake in certain Canadian assets. That venture has also resulted in an equity loss of $3.3 million year to date. So again, these partnership losses and these fair value write-downs, they just become material noise in the short-term earnings report.
So what does this all mean for you, the listener, as you review this report? The performance of these non-operating assets, that URC stake and the JCU joint venture results, they will be absolutely critical to watch on September 24th. They really have the potential to overshadow production trends and even spot pricing trends, especially given the lack of specific forward-looking guidance from management in recent filings about operational output. You really have to look past that headline EPS number and dive into the footnotes on asset valuation.
Absolutely. Now, moving past the earnings report itself, the upcoming 3 months, well, they're likely to focus heavily on events outside of the company's direct operational control. We're talking macro catalysts that can create tremendous share movement. First up, we're looking at potential ETF rebalancing and index inclusion likely happening in early October 2025.
Ah, yes, that's a classic external catalyst, right? That can drive massive buying or selling pressure completely unrelated to the company's performance.
It is. Depending on UEC's weighting changes within major sector indices, especially those focused on nuclear or clean energy, this could significantly impact share liquidity and volatility. Major funds might be forced to buy or sell just to match the new index composition you see.
We did see reports of institutional activity ticking up back in August. Is that positioning related to this looming ETF rebalancing, do you think? Or is there maybe a different signal driving the big players right now?
That increased institutional activity noted in August.
Yeah.
Yeah, that absolutely looks like investors positioning ahead of these expected macro events. And we should get concrete confirmation of that positioning in mid to late October. That's when the institutional 13F filings are disclosed.
Okay, for those who aren't familiar, what exactly does a 13F filing reveal? And why is that October date so crucial for understanding institutional sentiment?
Right. A 13F filing is essentially a quarterly report. It's required by the SEC from all institutional investment managers who manage over $100 million in assets. And it reveals their holdings, basically, who bought what. So October's filings will show us which major funds added or maybe shed UEC shares during that crucial Q3 positioning period. Think about that recent Harbor Capital Advisors LLC investment we noted. Seeing new, large institutional conviction like that is a major signal that big money is buying into the strategic narrative we discussed earlier.
New institutional conviction.
Yeah, that definitely signals major shifts. But beyond the concrete dates and regulatory filings, this sector, probably more than most, seems to run on speculation and rumor, especially regarding massive governmental contracts.
That's right. And this is kind of the fun part, the speculative catalyst that might drive the long-term momentum needed to justify that, well, that 81 PS ratio. The market seems to be buzzing with about four main concepts right now. The first one, and arguably the most important, is DOE contracts. The speculation persists that UEC could win a long-term supply contract with the U.S. Department of Energy for the National Strategic Reserve, right? This obviously leverages its position as the largest U.S. supplier.
Exactly. And that would be truly transformative. A long-term government contract like that. It wouldn't just anchor massive revenue for years. It would also validate UEC's strategic importance to national security. It could fundamentally change its valuation basis, moving it away from just volatile spot prices.
Okay, the second big rumor floating around is M&A activity. Market chatter regularly suggests the company might look to acquire smaller firms, consolidate its dominant U.S. position, especially given the current political emphasis on tightening that domestic supply chain.
Consolidation makes a lot of strategic sense in a market like this, one that's seeking stability. Then third, we have talk of international expansion. There are unconfirmed reports suggesting the company might pursue new asset development, or maybe joint ventures in places like Canada or Latin America. The idea being to diversify its resource base beyond just the U.S., making it less purely dependent on U.S. policy support.
Makes sense. And finally, the fourth item that comes up a lot in investor forums is capital decisions. Specifically, there's talk that management might be reviewing the liquidity position, possibly looking at a potential share buyback, or maybe even introducing a dividend, assuming cash flow and the long-term sector outlook improve significantly. A dividend. Wow, that would be a massive statement about their confidence in future profitability.
So to summarize the outlook here, near-term performance for Uranium Energy Corp. It's going to be defined by the high volatility around this September 24th earnings report. That volatility will be driven heavily by those non-operating paper losses we talked about and the resulting low analyst consensus score. Then, in the medium term, say the next few months, we're looking towards those shifting institutional positions revealed in the 13Fs and the index rebalancing flows in October.
But longer-term momentum, that hinges entirely on sustained uranium price trends and continued domestic nuclear policy support, doesn't it? Particularly those potentially huge DOE contracts. Those macro factors seem to be the ultimate drivers that might justify that astronomical press-to-sales ratio.
Right. The real challenge for you, the listener, is separating the noise of the quarter things like fair value losses and other non-cash items from the immense strategic value the market is assigning to UEC's position as the largest domestic supplier.
So we've discussed the importance of potential DOE contracts quite a bit. Given the company's unique position, here is a final provocative thought for you to consider as you look ahead. How significantly would a long-term strategic reserve contract and the undeniable U.S. policy commitment it represents, how much would that truly change the fundamental valuation of this stock? Would it make the reliance on volatile spot uranium prices or the fluctuation of their equity investments like URC almost secondary? I mean, the moment that kind of contract lands, do those non-operating paper losses cease to matter entirely to the market narrative? That's something to really chew on as you review the September 24th report.